Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Yesterday, the Australian dollar rebounded as strong job creation of 48,900 offsets a rise in unemployment, with the figures published by the Australian Bureau of Statistics showing the unemployment rose from 4.1 to 4.3%, reinforcing underlying resilience while keeping the RBA's policy outlook uncertain but broadly supportive. The employment gain comfortably beat the forecast of 20,000, though mixed labour signals continue to cloud the outlook. Along with that, the US dollar index, which measures the greenback strength against a basket of six major currencies, plummeted from 100 down to 99 as traders digest the Federal Reserve's rate decision this week, which kept rates on hold at 3.5 to 3.75. So, from a technical outlook, the pattern hasn't really changed. As you can still see here, 69 still holds as a base and around 71.5 is still capping the top side. In light of the technicals, they're not overly bullish, so I still feel that we are going to be contained in this range and continue to see this pattern move sideways. The euro dollar books firm gains on Thursday before and after the European Central Bank's policy decision. Supported by a softer US dollar, the ECB rates were unchanged, with the deposit rate at 2% and the main refinancing rate at 2.15%, and the marginal lending rate was at 2.40%, while highlighting rising uncertainty from the Middle East tensions. The statement also warned of higher inflation alongside weaker growth. So it's really on a point of wait and see, I suppose, in terms of how you read the statement. The market is also digesting the slip from 100 from the US dollar index to 99 as we adjust expectations of what the Federal Reserve may do with rates, with much speculation now of a cut in September. So with an engulfing candle, as you can see here, or more to the fact, a key reversal, could see further gains to the upside and looking towards 116.10 and 116.65. A break there would reinstate the upside further to around 118, 119. This is a very bullish signal and therefore keep an eye on how the market displays its strength. But I would like to see the MACD kick in with the RSI. So we're not fully there. And also the bearish trend is not quite recovered. So still a little bit of uncertainty where we are, but from this candle, let's see if demand can continue. Turning to dollar yen, well, after being in the region of 159, we can see we got a very heavy candle overnight and potentially seeing the bull trap triggered once again. I do feel there could be further follow-on given the fact that the technicals have buckled, so I'm now looking down to 156 as a potential target and reassess. Sterling also posted just an engulfing candle and now breaking through the trend line and looking towards its top side, that is around 134.5. Let's see if we can break above there. If so, then this would correct back towards 137 as a potential target. Turning to commodities, well, gold smashed through the trend line and now looking somewhat heavier. I feel it's time now to reassess just to see how this break unfolds, and it could drop towards 4,400 or 4,200. But I don't really have a strong call here because safe haven demand has always been the theme, and therefore bargain hunters may return very sharply. So I'd rather sit aside at the moment, see how it unfolds, and then reassess from there. Wrapping up with oil, another week of play, and now looking back towards the bottom side of its range, somewhere around $90 a barrel. I still feel this whipsaw price action may continue to the downside due to the heavy technicals, but we do need confirmation of a break of 90.20 to support a further slide. Other than that, we may probably continue to see this uncertainty. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report, and I hope you enjoy the great start in the new weekend.